Good morning, guys. Welcome. It's Tuesday, the 12th of September. Straight into it, we're going to have a quick look at the fundamentals. Overnight, President Trump has not yet decided who's going to take over the Fed for next year. However, it's been said that obviously he is likely to do it ahead of 2018. Now, again, this is potentially significant for a number of reasons. Okay, one, Yellen's position is not necessarily confirmed. She is notoriously known to be slightly more dovish. So anyone that was to come in most likely is probably going to be a little bit more hawkish than Yellen. Okay, important to understand. Obviously, at the moment there's I think around 6 candidates that potentially could be nominated. The important thing to go do is go write down those candidates, find out their stance in terms of monetary policy. Are they hawks in terms of inflation? Do they believe in the process of quantitative easing? Are they likely to potentially unwind that quantitative easing? Okay, because when you do this homework in advance, the moment that announcement comes out, the moment that opportunity arises, you're ready for it. You're not guessing, you're not thinking, you're merely executing on potential opportunity. Okay. In terms of North Korea, some potentially positive news. The UN has now voted unanimously to impose more sanctions. Now, the important thing to understand is a number of things. Number one, right, these sanctions does not mean that North Korea doesn't have oil or imports coming in. All right, I learned this morning something I didn't know at all, was that North Korea actually shares a border with Russia. And there was an article out this morning about the pickup in imports coming across that border from Russia to North Korea. So, the whole article it kind of spells out the idea that even though we might be imposing UN sanctions, it doesn't necessarily mean that North Korea is going to be cut off. Okay, so in essence, these sanctions might be nothing more than just rhetoric. Now, the important thing to understand is obviously the reaction. If we do get some form of a reaction from North Korea, whether it's a retaliatory type reaction or some sort of a launch or something, that creates opportunity. Okay, in its own, tensions are definitely starting to drop off. We can see those tensions dropping off. We can see that the markets are kind of now back on the front foot, equities rallying, and obviously the more risk on or risk off markets like the bonds and the gold are starting to ease off a little bit. Okay, so that's the important thing to understand. Now, with regards to what the outcome of those sanctions, we can see, the yen is pretty much flat this morning, yet the Nikkei is up 1.2%. So, there's always a very strong correlation. If the yen is down quite a lot, you do tend to see that filter into, positive day for the Nikkei. Obviously it's quite an export-driven, index. However, in this instance, the yen is flat, the Nikkei is up 1.2%. Right? If we look across the rest of Asia, the Kospi is also up quite aggressively this morning. Hang Seng is flat, Shanghai up, Shenzhen up, and the All Ordinaries up as well. So we're seeing a real risk-on tone this morning, very early. Again, cast your mind back to yesterday morning. We came in and we had the exact same scenario. We were up overnight with gaps. The DAX opened, the cash opened, and it went straight bid. So have a look at those charts from yesterday's equity markets. Make sure you're obviously prepared for the cash open this morning, because we could get similar pattern plays. Right? We could see the equities come in, open on the cash, and continue this trend to the upside. Okay. Then something very interesting. ECB officials pave way for gradual policy tightening. Now, what fascinates me about this article is not necessarily that it's new news, but it's the consensus. Now, I think it's wonderful how Mr. Draghi almost got away with a very dovish sort of statement last week, simply because the whole market's attention was not focused on tapering. It was actually focused on the euro, and by attaching this idea that a strong euro would ultimately dictate their future policy decisions, he kind of got away with a seemingly dovish outcome. Why? Because, well, the market says euro is strong, inflation projections are low all the way out to 2019, 2020, not going to reach target till 2020, so normalization is not going to take place until 2020, 2.5, 3 years from now. Now, the important thing to understand is that the ECB is tapering. Okay, they're going to be buying less bonds as of January next year. All things being equal, that shifts the supply and demand of take-up of bonds. Now, I think this article is important for a number of reasons. I think, the fact that we've got obviously 6 European members has come out yesterday. 6 European members, all voting members, come out, and they're all talking about the gradual reduction of ECB support. Okay, I think that could get a little bit more news today. I think we could see a little bit of a move potentially in the bond markets, not necessarily as a result of that article, but more because, maybe the market starts to realize that, well, actually, there is a very, very strong consensus on the board from both the doves and the hawks that the taper starts in January. Okay, just some of the obviously overnight moves. We can see that the dollar is pretty much a little bit on the front foot. Well, it was initially on the front foot. It's now giving those back, so flat across the dollar space. In terms of the indices, as we've said, nice and positive. Now, it's wonderful. If you take a little snapshot, we can see obviously the S&P marginally up on the overnights. The US 10s down. Okay, so we had quite an aggressive down day yesterday. We pretty much opened where we closed yesterday, and we've continued to offer. And that for me is important for the German Bund, particularly this morning. With that very tight consolidation range, we are firmly inside last week's value area. Technically speaking, Bund does have potential for a 20-30 tick move to the downside. It's just a matter of timing this morning. So keep an eye on that Bund market. Could give early opportunity upon the cash open. Okay, we can see euro, and we will talk a little bit about that in the analysis. Nice and aggressive. Good sell-off yesterday. Good strong full-bodied candle. Really showing the intention, the initiative coming through in this market from particularly these sellers. Okay, and we're going to talk a little bit about this oil. A fantastic reversal there yesterday. A wonderful pattern play. Great opportunity in both euro and oil today. We'll talk about that shortly. Okay, in terms of data for today, it's all about UK CPI. Particularly important number today, and I'll tell you why. Bank of England obviously is out later on this week, on Thursday. But the important thing is the stance of the Bank of England right now is quite simple. They're talking about, obviously first and foremost, the Bank of England is concerned that the market's pricing is not quite reflective of their understanding. Okay, and they came out and they said, monetary policy could be tightened by somewhat greater extent than the market expects if the economy meets their forecasts. So what they were leaning on was that the market's kind of a little bit mispriced based on where their forecasts expect the market to go. They then came out, and this is where the key crux and why today is so important. They then came out and said inflation is expected to peak at 3% in October 2017. Okay, so we are sitting in September. Today's expected 2.8 year on year versus the previous month 2.6. Anything higher, in other words, any 2.93% brings forward this idea that actually maybe inflation is a little bit hotter than expected, and we're also potentially likely to exceed the Bank of England's 3% peak that they're almost put on in the previous meeting. Okay, keep an eye on that. Very, very important number today. Again, obviously to the flip side, if we get a weaker number, if we get a 2.5, 2.4, again, that's also telling us that maybe, obviously, we're starting to see a slowdown in inflation. Now, this is the chart, and what we can see seasonally is over the last 2 months we've actually missed on expectation. All right, so the orange is the actual, whereas the blue line is the expectation. And we can see, 3 months ago we came in exactly as expected. In the last 2 months we've missed by 0.2 and 0.1%. Right, so we're starting to see weaker actual inflation than the expectation from economists. Right, now what we will see, what's wonderful about this chart, you can see that very rarely, in fact, since November last year, we have not had a miss or a beat of 0.2 or more. Okay, so there's your outlier. Anything 2.2 or more, a 0.3 number either way today, massive opportunity, massive outlier. All right, factor that into analysis. Obviously, with the live trading today, we'll go through that again. So we're talking about excess reversals today. Let's get straight into it and bang into that oil. Okay, obviously there's a profile strategy session. I do include candlesticks for you. It's been requested, and this is so important, guys. You are our members, all right? We want these streams to be valuable to you. There's no point in me going harping on about US 10-year bonds and talking about profiles on US 10-year bonds if not a single one of you even know how the US bonds work. Okay, so it's so important that you guys give us feedback. If you want us to discuss things in the oil, in the gold, in the euro, in the markets that we trade, give us the feedback. At the end of the day, the service is here for you guys. So just make sure you give us that feedback. Now, we've had a lot of feedback about, can we discuss the oil some more? So that's exactly what we're going to do today. We're going to discuss the oil market. Now, the oil's fantastic, and I'll tell you why. So this is the daily candle. We can see Friday we had that initiative. Okay, we had that real big sell-off, really big volume. Some real chunky sell orders came in, some great absorption. First thing to remember is price point 48.77. Okay. Go and have a look at that price point on Friday. It acted as a really huge, someone really got a massive position off at 48.77. Now, what I want to point out is we had the inside day break. We got the Venom pick up in volume range extension. Yesterday, we found a low, and we're going to talk a little bit about that low in a minute, but not only do we find a low, we have very aggressively reversed, and we closed relatively strong. Okay, so for all intents and purposes, after an initiative day like this, we shouldn't be closing strong. Okay, we don't have to necessarily close weak, but we should not be closing as strong as we did as yesterday. So there's something in this market, and this is where the profiles are fantastic. Okay, we can see this is obviously the oil profile, and I'm going to start with the weekly profile so I can show you where we are in context to the previous week. Okay, so on the left here, you've got the weekly profile from last week. So yesterday, we effectively took out last week's low, but we very sharply reversed. Okay, and this is where the tail reversal comes in. I'm going to open this up so you can see it. Okay, so we took out last week's low, but look at the V-shaped recovery there. Very, very, very strong recovery. Now, when you get these V-shaped recoveries, they tend to signal out very strong turning points in the market. Okay, if you've, I know a number of you have obviously taken the profiling course. I'll deal extensively with these V-shaped reversals. It's quite a strong, initiative pattern from a profile perspective. And we can see not only did we, V-shaped recovery, but we then took out the high and pretty much closed on the high of the day. So really strong reversal in the oil. Now the first thing we're going to do with that is we're going to put a big flat blue line on yesterday's low. Significant low, important low. If that goes, we should see follow through to the downside quite aggressively. Now, the first test we're going to have this morning is the retest of last week's value area high, that 48.42 area. Okay, keep an eye on that area all the way up to 70s, 48.42 up to 48.70. That is the key area from last week, and I'll show you why again on a candlestick chart. Okay, so this is a 30-minute candlestick chart, and we can see how this is the area that the market very quickly navigated away from. So between 30s and 70s, there was no trade. Now, if I show that to you on a profile again, you'll notice from last week, let me just close that up. Okay, so you'll notice from Friday, notice the sets of singles. Okay, so we can see the market very quickly moved away from 70s and left a load of singles from 30s up to 70s. So untraded area initiative, right? That is the key divide line today. That's what we call the line in the sand. That needs to hold in order for the initiative to the downside to hold. The moment we start to fill that out, it doesn't necessarily mean we've gone from bearish to bullish, but we then move from bearish to more neutral. In a neutral type event, again, what we like to do is start to fill out these single prints, take this low volume area and turn it into a potential high volume area. Now, what I will say, if oil does decide to get a bid on, whether today or tomorrow or the day after, we've got a significantly important top in place. One, we can see a very bad high around the 49.24s, but also a congested high from 24s to 42. So this area of, call it what you want, resistance or someone accumulating, this area, yeah, for all intents and purposes, is likely to be tested and taken out at the same time. And I'll show you what it looks like again on a candlestick chart. Okay, so what we've got here is a very, very nice little inverse head and shoulders. So we can see we've got our left shoulder there, our head, and our right shoulder. Okay, so the break of that triple top or that consolidation high is likely to bring with it not just some venom and volatility, but some really big potential upside, and that's what you want to focus on in the oil. We've got the bottom in place. Yesterday's bottom is significant. Okay, it was done with some real aggressive intent there, and the buyers definitely got their way. So keep an eye on not just that 30s to 70s area today. See how the market responds there. Don't be afraid to sell. Remember what I said. We're still technically bearish until that initiative fills out. Okay, when it fills out, we turn neutral. However, once we get above that 43.78 area, 48.78 area, be very cautious trying to entertain the short side. Why? Because we've got a very nasty, ugly top that needs to be taken out, and potential for a good, $4, $5, $6 rally toward the upside. Okay, that's the oil market. Let's now turn our attention to the euro. Again, a fascinating market. Absolutely loved the euro yesterday. It annoyed me whilst made me happy as well at the same time. But we've been talking about this double top. Okay, it's very obvious double top. We got the rejection the first time 2082. We then got the head fake and again rejection 2082. Yesterday we've had the follow through. Okay, we've had the full bodied follow through. Now this is showing us the intention from sellers. Now note, this isn't necessarily fresh shorts entering the market. Okay, it could be longs taking profit. However, nonetheless, shorts are dominating this market. Shorts are controlling this market, and they controlled it again yesterday. Okay, so I said something on Twitter yesterday which is so important, and it's something I learned, with these profit-taking moves. Don't sell into the lows in a profit-take move. Okay, why? Because what's creating this down move is longs taking profit. Now, longs take profit on the way down. They don't sell into lows. Okay, and the mistake that a lot of traders make is they get aggressive at the lows, and you get these very nasty little whipbacks the whole time. And those whipbacks can be quite costly. So the most important thing is sell into euro rallies. And the first area I want you to pay attention to today is around the 84. So 119.84. Keep an eye on that area in the euro. Okay, it was significant yesterday. If we do see the sellers step it up and get engaged there, we see a little bit of bout of profit taking coming in again, that's the area you want to pay attention to. Okay, don't sell into the lows, sell into the rallies, and I'm going to show you what that looks like, that sell into the rally type theme. Okay, for this I tend to use a little bit of a shorter term time frame. Why? Because if we're going to see a reaction function from a seller, if we're going to see someone take profit, okay, yes, of course you can see it on a half hour, right? But you're going to see it a lot better on a shorter term time frame, and we can see it here. If we look yesterday, this was the open. We can see we got a rally and it got hit back down. We got a small rally, got hit back down. Small rally, hit back down. In the afternoon, rally and hit back down, and a bid and hit back down. Okay, so every rally is being sold into in the euro. So in terms of price action, this is something that bamboozles me a lot of the time, is that traders always want to reinvent the wheel. They want to do some crazy things instead of just trade what you see. You can see every time this euro bounced yesterday, it got hit and bounced and hit and bounced and hit and bounced and hit. Every single bounce yesterday was met with profit taking and ultimately a rotation lower. Okay, so bear that in mind today when you do trade the euro and factor that into your analysis. Now, just to finish off, let's quickly have a little look at the euro profile, just something I pay attention to. Note yesterday, we opened inside of yesterday's value area. However, we spent no time inside yesterday's value area and we very quickly auctioned lower. Now, this is why I think the 84s is pretty crucial today. The question is, does the euro try and spend some time in yesterday's value area? For me, it shouldn't. Okay? If we fail on that value area low around those 84s and we start to auction lower, that's the signal for me to enter, targeting not just yesterday's low, but the extension down towards, again, this very nasty little looking, ledge or whatever you want to talk about. But in effect, we should take this out and potentially stops toward the downside. So again, we're looking for an entry at 84s, targeting a break of the 119 level towards the downside. Okay, that's our profile wrap up for today, guys. Let's just finish off with one of my favorite quotes. So trading for the rest of the day, we've got live trading at 9 o'clock. Do join in. And again, guys, I cannot stress, if you have feedback, if you want to deal with certain markets and certain streams, let us know. Okay, you've got the feedback channel for there. You've got the info at Axia Futures email there. Utilize it, guys. The service is for you at the end of the day. So live trading, and then obviously we've got Joe this afternoon for the usual price ladder debrief. Okay. So, Mr. Wooden, regarded as one of the greatest coaches, and I can see a smile coming behind me. This book was actually given to me by the trader sitting behind me. Fantastic book. John Wooden, regarded as one of the greatest coaches of all time, had some very, very, deep values and deep principles which he applied not just to his life but also to his coaching. And he spoke a lot about success. So people tend to look at success as outcome and results, etc., etc. And for him, success was nothing more than, and I'll read this quote, but he believed success was about applying yourself to the best of your ability. All that mattered was that every day you gave it your all, you did the best of your ability, and that implied you were successful, not the results. And it's so important in trading because it is a results business. Everything is about green and red. But it shouldn't be. Okay, success is about if you apply yourself correctly every day and to the best of your ability, you are successful. So, success is peace of mind attained only through self-satisfaction and knowing you've made the effort, do the best of what you're capable. So you know your capabilities, do the best to your capability, and you are successful. Catch up again later, guys.